All right, guys, thanks so much. Yeah, as we mentioned, we are thrilled to have once again the CEO of the NEO Exchange, Jos Schmitt, with us once again, and from CIBC Wealth Management Solutions, Elliott Scherer, Managing Director and Head of Sales at CIBC Wealth Management Solutions. We're going to talk today, guys, about CDRs. We're excited to have both of you on today. Good to see you both, guys. When we spoke last, Elliott, good to see you. Back in July, this product was just being launched in the Toronto market and came to market with some big name tech names, Amazon.com to start. People might be familiar with ADRs south of the border. This is a very similar product here in Canada in CDRs. Since then, since July, CIBC also introduced Tesla, Google, Apple, and Netflix. We're happy to announce today the next 5. Let's talk a little bit about what people need to know, Elliott, about CDRs.
Thanks. Yeah, it's been a really exciting 2 months since we last spoke. Amazon.com got great reception from the market, and we quickly followed up with that with the Google and Tesla, Netflix, and Apple. CDRs are quite simple. It's a Canadian security that allows Canadian investors to invest in global stocks in Canadian dollars on a Canadian stock exchange, the NEO Stock Exchange, with an embedded currency hedge, so a built-in currency hedge. We've seen great response from the do-it-yourself investor channel, so your client base here. We've seen fantastic adoption from the advisor community, active trading every day. I heard the analyst before here talking about Microsoft and Facebook. Those are 2 of the 5 names that we just added to our roster of CDRs, and we're really excited for the future. If you want to compare it to ADRs, it's a very simple comparison. That was our inspiration for creating CDRs. We have the additional benefit of the currency hedge, so that's basically the only real difference. ADRs are a vehicle that foreign companies use to raise money in the US. So here we're doing it for Canadians, so it's foreign companies listing in Canada. Canadians can already buy Microsoft and Facebook, but they can't do it in Canadian dollars. They can't do it with a currency hedge, and they can't do it with fractionalization. So those are kind of the real key differentiators between ADRs and CDRs.
So as we said, we are excited to announce the next batch of names. You give a couple of them there, Elliott. Let's not keep them waiting. What are the next 5 coming to?
Yeah, sorry, didn't do that intentionally. So we've got Microsoft and Facebook, which I mentioned. We've launched Disney, Visa, and PayPal. So those are the 5 in addition to the original 5. So that doubles our lineup to 10. We're not stopping here. We've got lots of additional CDRs that we're going to be launching in the future. There they are, the 10 that are listed. The tickers are very simple for our viewers here to recognize. They are the same tickers that you can use to find the US securities, save for Facebook and Visa, because those tickers were already used in Canada. So for Facebook, the ticker is FACE, F-A-C-E. And for Visa, the ticker is Visa, V-I-S-A. It's everywhere you want to be.
Jos Schmitt, President and CEO of the NEO Exchange, here to give us the exchange side of things here when it comes to this product. Jos, give us, from a NEO perspective, what this means for the exchange to have, such big names, global names trading on the NEO Exchange.
Yeah, sure, Brandon. And first of all, thanks for having us with you. Always a pleasure. From a NEO perspective, I would say when CIBC and Elliott came with these products, with these CDRs, we were extremely excited immediately. And I think the reason for that is, as you know, we are all about innovation. We're all about doing what's right for investors. And this product really fits 100% in that category. Yes, as Elliott said, it is inspired by ADRs, but it comes with some core characteristics that make it very unique and that help, in my eyes, Canadian investors to have access to those large international names, and even just provide certain investors with access, investors who are not able to, put the large amounts on the table that you need for some of those securities. Think about the size of Amazon. We're very excited about that, and I think that for our exchange, it's an opportunity, of course, to continue to come with innovation, to continue to come with new products and new ideas. But give credit to those who deserve credit. This is a CIBC offering. I think they are the ones who really came up with this, and we were there to act as their partner and make this possible in the most efficient possible way. So that's what I would probably say is NEO's view on the matter, and I think it's going to be very exciting because they're not there to stop. More to come.
Jos, from the trading community, short-term trading community specifically, we're looking for quality of volume, quality of order flow. What does the NEO Exchange do and provide on a daily basis to ensure those characteristics that are so vital are present every single day?
Yeah, I think probably the first point that I would put forward, and I'm going to tie that back here to the CDRs. Like a product like a CDR, as you know, like an ADR, is derived from an underlying listed security. In this case, the Amazons, the Facebooks that are listed in the US. So to provide quality liquidity in that market, you need a quality market maker, and I think that the CIBC there again is doing a phenomenal job. If you look at the tracking between the CDR and the underlying securities, it's extremely good, extremely strong, and that is because the market maker is doing a great job. Now, for that market maker to do a great job, he needs to have the skills, the capabilities, the technology to do it. And we all know that in today's world, you are competing with other parties who are also trading in the US in those markets and who may have a speed advantage and can try to take them out when they quote. Well, one of the features in our model is a speed bump that allows to level the market, level the playing field amongst all players, and that protects also the market maker. So the market maker is in a better position to quote better and larger size. The second point that I would make is probably related to who is in that market. And I'm sure Elliott can share much more information about that, but we see a lot of retail flow. We see a lot of flow coming from financial advisors, investment advisors. That is quality flow. That is people who want to take a position in those stocks. And I think that there's there for me also a clear opportunity for the day trading community to trade with them. And there's no concerns about liquidity, because at the end of the day, the liquidity of the CDR is driven by the liquidity of the underlying stocks. So I think great opportunities for the day trading community. And look at the market, like you guys were talking about it earlier. The market for the moment is getting extremely volatile again. Think about the 10 stocks that Elliott mentioned. Think about how those stocks have been behaving in the last few weeks, and you can just see all the opportunities that are there for the day trading community.
Yeah, let's talk about that a little bit more, Elliott. Let's give that community specifically. Jos mentioned, a lot of retail order flow coming into these products specifically. What do people need to know when it comes to, you mentioned a few to start things off here, but what do people need to know about this product? What are the benefits really for, a Canadian investor investing in such a product?
Yeah, so Jos hit it on the head there. We're getting great adoption. I think right now we're seeing about 2/3 of our flow from the day trading community, from the people on the discount brokerage platforms, and they're seeing definitely fantastic execution, which I'll get to in a second. But I'd say the three key benefits. The first one being the fractionalization. So if you want to invest in Amazon.com, the US listed share, it's $3,500 per share. That's hard to get in a lot of portfolios. It's even hard for advisors, portfolio managers, to put across their book because of the smaller size of some registered accounts as examples. So by using a CDR, we were able to create a fractional concept through something called CDR ratio. And basically what that means is that for every X number of CDRs, that's equivalent to one share. So as Amazon.com, when we launched, it was 200 CDRs was equivalent to one Amazon.com share. So we basically fractionalized it to 1 to 200 ratio. Huge benefit there for investors. Second one is the built-in currency hedge. That's a risk that people before this weren't able to manage. Currency hedged ETFs are very, very popular in this country. clients are looking to diversify their portfolios outside of Canada. And Canadians are just predominantly overweight Canada. And part of that is because they don't want to convert their currency and they don't want to take on more currency risk. As the US dollar continues to strengthen, a lot of advisors and clients alike are telling us maybe they're going to take some of that risk off the table and move into the currency hedged CDR. And you just had a chart up there a second ago. There's two lines on that chart. You can't really even tell that there's two lines on the chart. There's an orange and a white line. Actually, this is the intraday chart comparison. This is a fantastic one as well for those who are looking for execution. There's an orange line and a white line. This is the tick by tick comparison. This one is the end of day comparison. And you can't even see that there's two lines there. That's how strong the execution is. So you're just getting the return. If Amazon.com is up 1.4% in US dollars, you're getting it up 1.4% Canadian dollars. The tracking has been excellent thus far. And then the third key benefit here is that it's all denominated in Canadian dollars. Your dividends are denominated in Canadian dollars. And our investor base, our clients are Canadian and they live in Canada. They spend Canadian dollars and they make Canadian dollars. So their investment portfolio for the most part should be in Canadian dollars. So the more that we can help them do that, the better. And by doing this, they avoid and eliminate the need to convert their Canadian dollars to make investments in Apple and Google, et cetera, which reduces one, an administrative task, and two, a cost. So really strong feedback that we're getting from the media and from the client base. So hopefully that just continues to result in more adoption. We're really excited. We think that this can revolutionize the way that Canadians invest in global companies.
Elliott, Scherer, Managing Director and Head of Sales at CIBC Wealth Management Solutions. Great information, as always. Jos Schmitt, CEO and President of the NEO Exchange. We appreciate your time, gentlemen. Always a pleasure. Best of luck with the new CDRs.
Thank you.
Good to see you both. There we go, guys. Another batch coming to the NEO Exchange. Heck names.